Hi everyone, Piotr speaking. A few days ago I have published this video. I'd like to give you an update to the current situation based on my analysis regarding currency pairs I trade the most. So coming back to the Euro USD, as you can see, I think we have the market did a B wave to the upside and started falling down. This downward move for me, it's like 1, 2, 3, 4, and 5. So we have had F3 to the upside and F5 to the downside in order to complete 3, 3, 5, a flat correction, ABC correction. This upward movement I treat it as a 1 or an A to the upside. I don't think that high is a 1. The reason for that is that you have very nice divergence at that movement to the upside. So this is typical for the fifth wave in a 5-wave structure. So you can find this divergence. So we have a high and higher high, we have a high and low on this MACD indicator. Is it 1 or A? Doesn't matter at the moment. That's what important is it the ABC correction, okay? And is this market going to go to the upside, or may this market start falling again? So that's the question, okay? So as long that low is not surpassed, we may treat it as an A and B, or 1 and 2 and 3 to the upside. From my perspective, I treat this movement A. This is an A. This is an B, ABC structure, and this is a 5 to the upside. A couple days ago, I have presented this post on my Google Plus, and I've treated this upward move as a 1 to the upside. So coming back to this 1-hour chart, we may treat that upward movement as another 5 to the upside as long that low is not surpassed. So the market, that upward movement and this correction here, ABC correction, this correction did not enter into the price territory of wave 1. So this might be 1, 2, 3, 4, and a 5th wave in a diagonal to the upside. And currently we are doing in my opinion 5, 3, 5 to the downside, or 1, 2, 3, 4, 5, depending on which of these alternative scenarios is more likely. Okay, in my opinion, more likely is 1, 2, 3, 4, 5. Okay, in order to complete A, B, C, rather than 1, 2, 1, 2. So afterwards, after this is completed, I'm expecting the market to reverse and start climbing to the upside, as mentioned before. So 1, 2, 3, 4, 5. Okay, so most probably a C wave to the upside. This morning, and actually yesterday, this morning I have suggested that the market may break to the downside on the London session, or during the London session. And as you can see, this FIBO 100 was breaking to the downside, and if you check the 30-minute chart, you can see we have moved through this FIBO 100 and we are falling to the downside. Okay, so that is likely that the market may try to fall to the downside, and after that break to the downside, we may have a like 80 pips movement to the downside. So this is also possible. And actually, I'm currently in the short position, which I presented yesterday, actually saying to close that position last night, but this morning I said, okay, I will reopen this position once again. I mean, the position was not open yet because this was a sell stop order, which was not triggered yesterday, but it happened this morning. So the market needed a bit longer in order to complete this A, B, in my opinion, C correction, and finally broke through that last low and is currently moving to the falling to the downside. Okay, switching to the Great Britain Pound USD. Last time I said we may have a fourth corrective wave in a diagonal 1, 2, 3, 4 and maybe a final 5. So should we have a strong reversal in this area based on candlesticks, I may try to go long. Okay, it's about to complete, in my opinion. So you can focus, you can look for a reversal in this area. The market, as long the market is not able to break that low, a reversal in that area will indicate, in my opinion, an A, a B, and a C wave to the upside. The question is whether this fourth corrective wave is already completed, or we have an A, B, and a C as a flat correction in this area on the 3 hours chart. This looks like an ABC to the upside, and this downward movement looks like a 5 to the downside. I mean 1, 2, a 3, 4, and another 5. Should this market break strongly through that line, through that lower boundary line of this triangle, of this ending diagonal, in my opinion, it's not valid anymore. Yeah, but should this market reverse in this area and break through that line, the higher one, it's likely that it's ended. Okay, and the market is reversing. Okay, let's switch to the Great Britain Pound, Japanese yen. Based on the monthly chart, we'll have a strong monthly candle here, which breaks through this Bollinger Middle Band. Okay, usually it indicates a selling pressure. Okay, indicates the market is likely to fall to a downside on this weekly. At the Bollinger Lower Band, a broken support line, a broken trend line, support line, but on this daily chart, in case the market is respecting that Fibo level, in my opinion, this is an AB. This is 1, 2. This is in. I would like to say, no, I don't think it's a 1, 2, 3, 4, and 5. This is an ABC structure for a B wave. Okay, and yesterday the market reacted to the almost 107.02 level. So the market may try to reverse in this area. Okay, I do not treat that downward movement. This might be a 3, 3, and a 5 here. That could be a 5 to the downside here, like 1, 2, 3, 4, and 5. So 3, 3, 5. Okay, a flat correction, 3, 3, 5. And this could be a B wave. Yeah, this could be a structure for a B wave. ABC B, and another move to the upside in order to complete this ABC structure. Alternatively, this is a 5, 3, but that should be a strong 5, and it's not the case. So that's the issue I have. This is not moving that strongly. So that could be alternatively 1, 2, 3, 4, 5. So another 1, 1, 2, 1, 2. Yeah, but I don't think so. To be honest. If you check the MACD indicator, so you will find here also a divergence. Okay, so we have a low, a higher low, a low, a new low. So it looks like a divergence here as well. So that might suggest the market is about to reverse. Okay, or a reversal may happen. The count here, based on Elliott, is a little bit tricky in my opinion, because it's not that clear in my opinion. So I had a few alternative scenarios here. That one I have presented just now is for myself most reliable one and most probable one. but yeah, should I have something else, I will present it, but at the moment I think that's the most likely one. Anyway, I'm not investing at the moment, so that's the point. I'm not investing because I'm waiting for the market to show the right direction, to show me what's going on here. Are they going to reverse in this area or not? Should it happen, I will go long for the C wave. Okay, there will be a time an opportunity to go long. So you don't have to catch the low. Wait for the reversal and then try to enter into the trade. This will be a nice trade as well. You can compare it in the situation here. I was trying to go short here in that area, and I was thrown out on with a stop loss. Although the market did fall to the downside. That's how it is sometimes. Okay, we had this harmonic pattern here, and usually they try to trade it the way that the same distance the market did in the first wave. They try to trade the same distance in this third movement. So first movement, a correction, and another movement, A, B, and a C, somehow like that. Those harmonic patterns, they are quite reliable. We had one on 1 hour chart. I've shown it a few days ago. So it was at the mid December, and that was the final move. So we were somewhere here. So that's the movement here based on this harmonic pattern. So you can see how strong it was. So the market broke through a support line based on that harmonic pattern. It took a time. Because it was a tricky area as well. The market broke through that line, then retested once, twice, and then finally start falling to a downside. The reason for that was that the market was expecting ABC structure as around that FIBO level. So that was the reason the market was trying to reverse in that area, and that was not successful. And then finally we had that strong red candle to the downside. Okay, we may have a flat correction, A, B, and a C wave. Okay, let's have a look on the Euro USD. The market reached that FIBO 161.8 level. And you can see the strong reaction and at that level. It may go to the upside and try to retest that FIBO level once again, but and sometimes in reverse and then try to go once again to the downside. I will think for a while, and then depending on the situation on this lower time frames, let's check them right now. Because sometimes you can close your position and reopen it once again. Okay, at that level, close it at that level and reopen it once again at that level. Okay, so you would trade once again the same trade. But checking the 3 hours chart, and the market will close at 4 p.m. That candle will be closed at 4 p.m. It's likely that it's a red candle. So the market may try to make another smaller candle here, a second one, and after that we'll have a stronger move to the downside. It's the last day of a year. Okay, so there are less traders on the market, and the brokers they are going to close the business slightly earlier today. So sometimes it's better to close your position also early and start trading again next week. Okay, anyway, thanks for watching. Happy trading.